Hello class, today we are going to be talking about Chapter 5, Activity-Based Costing and Activity-Based Management. In this class, in this chapter, we will discuss the different methods that can be used to allocate overhead and other types of expenses. As you'll see the difference in the way the cost accountant views the cost pool or pools to be allocated. In simple costing, the overhead is spread to cost objects based on one or sometimes a few simple alleged causes. With ABC, it is based on the underlying activity, which generates the expense. Generally, it results in a more accurate cost. The learning objectives for this particular chapter explain how broad averaging under cost and overcost products or services, present 3 guidelines for refining a costing system, distinguish between simple and activity-based costing systems, describe the 4-part cost hierarchy, cost products or services using activity-based costing, evaluate the costs and benefits of implementing activity-based costing systems, explain how managers use activity-based costing systems and activity-based management, and compare activity-based costing systems and department costing systems. So now, given a little background here, when companies tend to produce only one or limited number of products, a broad average can be an effective way of allocating cost. However, as the breadth of the products offered increases and their use of resources becomes more diverse, that system is often no longer accurate. The departmental method is a bit of an improvement, but it still uses a relatively broad average. Recall from the formula to calculate the plant-wide average overhead rate using the total estimated overhead in the numerator and the total estimated base that will be used as the denominator. That base might be direct labor hours, direct labor dollars, machine hours, or something else. The result will be a dollar amount per single unit of the base. For example, if total overhead estimate is about $750,000 and our total estimated base is 15,000 direct labor hours, we take the 750 divided by the 15,000 and we would allocate $50 of overhead per direct labor hour. The department rental rate works similar. It would take the 750,000 and divide over overhead separately by department. So example of plant-wide versus the overhead, the department overhead. In our example, let's say that we have Department A and Department B. For Department A, our overhead costs will be $300,000. For Department B, our overhead costs will be $450,000. For Department A, we're going to use direct labor hours, and for Department B, we're going to use machine hours. So for Department A, we're going to have 88,000 direct labor hours. And for Department B, we're going to have 7,000. For Department B, we really don't care about the direct labor hours. For the manufacturing overhead or the machine hours, we're going to have 750 for Department A, which we're not going to use, and then 1,200 for Department B. Now, to get the allocation rate for Department A, I would take the 300,000 and divide by the 8,000, and I would get a rate of $37.50 per direct labor hours. For the overhead rate for Department B, I would take the 450 and divide by 1,200, and so I would have $375 per machine hour. Now let's take a look if we had did it the other way when we did it over department or over the plant-wide. We would take the 750 and divide it by 15,000, or we would get the $50 per direct labor hour. Whereas with the manufacturing overhead or the machine hours, we would take the 750 and divide it by 1950, which is the sum of the machine hours for both departments, and we would get a rate of $384.62. Comparing those department rental rates to the plant-wide rates, we see that the allocation of the cost is more accurate using the department rental rates. This concept of more detailed cost allocation is extended further with the ABC costing, as we'll soon learn. As a result of the change in product offerings, which almost certainly will change the company's manufacturing costs, this type of broad averaging is no longer as accurate as companies need their costing to be. The short and long-term effect of this overhead of this over or under costing can be significant. Now, what is overhead costing or overcosting? Basically, what that is a product consumes a low level of resources, but is allocated a higher cost per unit. Whereas the undercosting is the opposite. A product consumes a high amount of level of resources, but it's allocated low cost per unit. So basically what we're doing is we're doing a cross-subsidization. It causes problems for businesses. The greater degree, the bigger the problems are likely to be. The manufacturing overhead costs that are allocated are included as part of the product cost. Therefore, they are included when looking at the profitability of a particular product. Some products will show higher profitability than they should, while others will look like duds when in reality they're contributing to the firm's profitability. And of course, these results could be disastrous. So consider this. If you were using cost to determine price, what effect would that have? And if you were looking at a product profitability, determining market focus, what would result? Let's take a look at our previous example. So you recall from the previous example, we have a department rate of $37.50 for Department A, and we had a rate of $375 in Department B. Now let's look at a particular job. We have job 470 or 457. It incurs 1,000 direct labor hours in each department, so a total of 2,000 direct labor hours. It incurs 40 machine hours in Department A and 75 machine hours in Department B. So let's compare the cost of the job based on different allocation methods. So if I take the 1,000 times 37.50, I get 37,500 for Department A costs. And if I take the 75 times the 375 for Department B, my costs are 28,125. If I add those two together, I get 65,625, and that would be the overhead cost that's allocated based on department. Now, if I do a plant-wide, I'm going to take the 2,000, which is the total number of direct labor hours involved in this product, and I'm going to multiply that by 50, and that's the plant-wide rate, and I get $100,000. So as you can see, by just doing the direct labor hours, we're going to be overcosting this particular job. Now, in the slide, that's a little off. It should be 115. That's 75 plus the 75 plus the 40, which is 115. If I take 115 and multiply that by 384.62, I'm going to get 44,231.30. And so as you can see, if we based it on machine hours, the costing for the overhead applied to this particular job would be under costing. Now, in your book, we have the example of PLASTIM, or I'm not really sure how to say that, but we're going to go with PLASTIM. And basically what this company is a company that does a manufacture of lenses. They have two types of manufacturing lenses. They have the CL5 lens and the S3 lens. And in this example, if you look on page 153 in your book, they start talking about this particular company. And what has happened is a company that they supply these lenses to, the S3 lenses, has gotten another bid from another company. And so what we have to do is we have to analyze this particular company and the cost for this particular lens to see if we can't lower the price to compete with the other company. So as you can see from this chart, it depicts the process involved in simple costing for our example company, which currently uses that costing system. Let's go through the steps. The first step is to identify the cost objects. Well, in this case, it's going to be the S3 lens and the CL5 lens. We have a quantity of 60,000 for the S3 lens, and we have a quantity of 15,000 for the CL5 lens. Step 2 is to identify the direct cost, and depicted by the bottom two triangles, identified as direct labor cost and direct manufacture or materials cost. Step 3 is to select the cost allocation base to use for allocating the indirect costs. Now, this particular company has decided to use direct manufacturing hours as the base and estimates that there's going to be 39,750 direct labor hours. Step 4 is to identify the indirect costs associated with each allocation base. If you only have one base, you'll need only one cost pool for all the costs to be allocated. If you're using multiple bases, you'll separate the costs to be allocated into the separate pools for each base. Platinum only uses one allocation base, which necessitates having only one cost pool. The estimate of their indirect cost is $2,385,000. In step 5, we compute the rate per unit of each cost allocation base. Remember the formula? It's budgeted total cost, indirect cost pool divided by budgeted total quantity of the cost allocation base. So we're going to take the $2,385,000 and divide it by 39,750. And our direct manufacturing rate is going to be, our overhead rate is going to be $60 per direct manufacturing labor hour. Step 6, we're going to compute the indirect costs allocated to the products. Our managers have indicated that the direct labor hours budget for the 60,000 S3 units and the 30,000 hours, and 9,750 hours for the 15,000 CL5 lens that we're going to make. So if I take the 30,000 times the 60, I'm going to get 1.8 million. Now, if I take the 9,750 times the 60, I'm going to get 585,000 units or dollars. In step 7, we're going to compute the cost of the products by adding all direct and indirect costs assigned to the product. So let's look at this. So in this particular thing, we have the direct materials. So we have 1.125 million. We have direct labor of 600,000, so our direct cost is 1.75 or 725 million. Our indirect cost that we did in step 6, which was taking the 30,000 times the $60 per hour, and that's 1.8 million. So my cost is going to be 3.525 million. That comes out to a 58.75 cost per unit for the S3 lens. For my direct materials, I have a cost of 675,000, and my direct manufacturing labor is 195,000. We have the allocated cost of 585, which we got that by taking 9,750 times 60. Add all those numbers together, I get 1.455 million, or a $97 cost per unit. So in this whole thing, we did the 5 steps of decision-making process. You may recall from chapter 1 our discussion on the 5-step decision-making process. The path is clear. They need to determine if they can profitably offer S3 to their customer at a lower price. They will do this by obtaining information on their current costing method and look at refining costing methods. Is there a more accurate way of allocating costs to their products that may change their pricing strategy? Remember, you aren't searching for a cost method that will allow you to bid for the business. You're searching for an improved costing system, which may or may not have that result. So Platinum has decided to do the ABC illustration, and this is how it goes. It appears to be facing 3 primary reasons why refining costing systems are gaining in popularity. Those reasons are increase in product diversity, increase in indirect costs, and increase in competition. Guidelines that we follow to refine a costing system are: the first one that we're going to do is trace as many direct costs as possible. The second step, we're going to expand the number of indirect pools, such that each homogeneous cost pool has the same or similar cause and effect relationship with the single cost driver. This step is more difficult than it sounds. To accomplish it, you must analyze the indirect costs and answer the question, what actually happens here to incur these costs? Step 3 is to identify the cause of the indirect costs as the cost driver and use it as the allocation base for each identified pool. What we see here is the same process, the same 7 steps from Exhibit 5.1, but expanded using the best tools we have to refine a cost system, which is activity-based costing, known as ABC. ABC uses activities as a fundamental cost object. For example, if your indirect pool, you may have expenses related to the purchasing department. Perhaps the purchasing department incurs expenses in relationship to the number of purchase orders created or the number of line items received. That determined and the subsequent use of that activity as the cost driver is how ABC refines our cost system. At PLASTIM, after such research and analysis, the managers define the activities we see here. But please note, this process of defining activities is often quite difficult. The identification of activities that truly drive the costs, the activities that should be separated or combined, all present challenges in the process. An ABC system should have enough activities identified to properly allocate costs, but not so many that the system becomes unwily. So in this particular example, they have identified 6 cost pools. We have design activities, and they allocated $450,000 to that. Molding machine setup activities, and that's $300,000. Molding machine operation activities, and that's $637,500. Shipment setup activities, which is $81,000, and distribution activities, $391,500, and finally administration activities at $255,000. For the first one, they're going to say we have 100 parts per square foot. That is the cost allocation base. We take that 100 divided by the 450 divided by the 100, and so we're going to charge $4,500 per part square foot. For the molding machine setup activities, they're saying that we're going to be using 2,000 setup hours. So we're going to take the 300,000 divided by 200 or 2,000 and get $150 per setup hour. For the molding machine operation activities, it says we're going to use molding machine hours, which is $12,750. Divide that into $637,500 and get $50 per molding machine hour. Then on the shipment, I have 200 shipments, so I'm going to take that and divide it into 81,000. I get $405 per shipment. Distribution activities, I have 67,500 cubic feet delivered, and so I'm going to take that number and divide it into 391,500, and I get $5.80 per cubic foot delivered. And finally, for the administration activities, we're going to base that on direct manufacturing labor hours. There's 39,750. Take that into 255, and we're going to charge the lens $6.41 or 42 cents per direct manufacturing labor. We're going to add those two up with the direct costs, and that's how we're going to get the cost per unit. So on the next slide, you'll see how this broke down. By taking the direct cost, of course, that's the same as before. But then the indirect cost is going to be broken down by the S3 and CL5, and then by design, the setup molding, the machine operations, and so forth. So as you can see, we drove the cost down to $49.98 per unit compared to the CL5 unit, which is $132 per unit. Now, if you go back to when we did this in the first place, We've drove the cost down based, getting more detailed by only $10 or by about almost $10 for the S3 unit. But we also found out that we are actually undercharging for the SCL5 unit. We originally thought our cost per unit was $97 and now it's $132. So a huge difference there. The comparison shows that we have been overcosting the S3 lens by $8.50 or 77 dollars per unit, and we've been undercosting the CL5 lens by $35. So as you can see, this is a huge impact. We can lower the price on the S3 unit, and we could raise the price on the CL5 unit. ABC is alternate way of allocating costs. It is generally considered to be more accurate and more costly to implement. A company should consider refining their cost system when evidence begins to suggest that their existing cost system is flawed. For Platinum, that occurred when they were in danger of losing business due to the higher price. Because of a number of critical decisions such as pricing, whether or not one product should be pushed over another, or not a product should be dropped, or whether a product should be dropped, will be made using cost information. Best efforts should be used to arrive at a cost that is fair and reasonable for each product. The goal isn't to obtain a cost that serves the current purposes. This is an imprecise science, and differences of opinion are likely to occur. As we've seen, implementing a refined costing system is not an easy task, and it requires considerable resources of company. If badly done, it is possible to have exhausted those resources without an improvement to the company's costing system. Some of the signals that you should be looking out for to determine if the ABC system should be implemented. Significant amounts of indirect costs are allocated using only one or one or two cost pools. Another signal is all or most indirect costs are identified as output unit level costs. Products make a diverse demand on resources because of volume, process steps, batch size, or complexity. And products that a company is well suited to make show small profits, whereas products that the company is less suited to make is showing large profits. So those are all reasons why you might want to look into an ABC system. A move to a more refined system is not achieved solely within the cost accounting or accounting department. It is a firm-wide effort and should be acknowledged as such. The 5 issues discussed here will ensure that the implementation is successful. So some of the things you need to look out is gain support from top management and create a sense of urgency whenever you're trying to do this. Create a guiding coalition of managers throughout the value chain of the ABC effort. Educate and train employees in ABC as a basis of employee empowerment. Seek small, short-run success as proof that the ABC implementation is yielding results. And recognize that ABC is not perfect, but better cost but complex system. ABC is really the first step. Once the revised information and updated cost products have been calculated, the next step is for that information to be used for the firm's decision making. Activity-based management is a method of management decision making that uses ABC information to improve customer satisfaction and the firm's profitability. We are defining ABM broadly to include decisions about pricing, product mix, cost reduction, process improvement, and product and process designs. ABC isn't only for manufacturing firms. As you can see from this slide, it can be successfully implemented in service or merchandising firms as well. Such firms have overheads that need to be allocated, and that overhead can be organized into the activities that drive the cost in a manner just like we observe in the manufacturing company. That's pretty well at the end of this presentation. At the end of this slides, you'll see some terms that you need to learn. I would take a look at those, write those down, and write down the definitions. That will help you study for test 2. Again, if you have any questions about this information, please do not hesitate to ask. And the lecture word for today is fall. Thank you and have a great night.